Welcome to the All Sorts Podcast Deep Dive. Today we're diving into a fascinating corner of global finance, the yen carry trade, and meeting the legendary Mrs. Watanabe. Now, before you picture one specific woman in a power suit, Mrs. Watanabe is more of a collective noun.
That's right. It's a playful nickname for the thousands of Japanese housewives who, starting in the early 2000s, turned their household savings into a force to be reckoned with in the global currency market.
Okay, so picture this. It's the early 2000s and we're in Japan. Interest rates are incredibly low, sometimes even below 1%, as the country grapples with deflation. But here's the twist. Japan also has a strong culture of saving.
Precisely. So you have this huge pool of household savings sitting in bank accounts earning next to nothing. And then enter the internet. Online trading platforms become widely available, making it easier than ever for individuals to access the foreign exchange market.
So Mrs. Watanabe is suddenly sitting at her computer looking at these low returns at home and thinking there has to be a better way.
Exactly. And that's where the yen carry trade enters the picture. It's a strategy that involves borrowing money in a low interest rate currency like the Japanese yen and then converting it into a higher yielding currency, such as the Australian dollar or the US dollar.
So they're essentially taking advantage of the difference in interest rates between these countries.
That's the core of it. They borrow yen cheaply and then invest it where they can earn a higher return. It's a classic arbitrage strategy, a way to profit from price discrepancies in different markets.
It sounds almost too good to be true. Was it really that simple for Mrs. Watanabe to make money this way?
Well, in those early years, it was surprisingly effective. The yen was relatively stable and interest rate differentials were quite wide. For a while, it really was a case of buy low, sell high, and Mrs. Watanabe reaped the rewards.
But there's always a catch, right? I mean, financial markets are rarely that predictable.
You're absolutely right. The yen carry trade, like any investment strategy, has its risks. And one of the biggest risks is currency fluctuation. If the yen suddenly strengthens against the currency you've invested in, those profits can evaporate quickly.
So were there any events that triggered this kind of volatility in the yen?
Unfortunately, yes. The first major shock came in 1998 with the Russian financial crisis. This sent ripples of panic through the global financial system. Investors seeking safety pulled their money out of risky assets and flocked to safe haven currencies.
And I'm guessing the Japanese yen, with its reputation for stability, fit that bill perfectly.
You got it. The yen's value shot up, which was bad news for anyone who'd borrowed in yen for a carry trade.
So suddenly those cheap loans weren't so cheap anymore.
That's right. The rising yen meant larger loan repayments, turning potential profits into losses. It was a harsh lesson in the fickle nature of currency markets.
So after that setback, did these Japanese investors give up on the global markets?
Not at all. Remember, these are savvy individuals, not easily deterred. While some scaled back their carry trade activities, others started exploring new avenues like day trading.
That seems like a pretty big shift. Day trading requires a lot more attention and quick decision-making, right?
Absolutely. It involves constantly monitoring market fluctuations and making rapid trades to capitalize on short-term price movements. It's a much faster-paced and higher-risk approach than the longer-term carry trade.
So what drove this shift to day trading? Was it purely a response to the risks of the carry trade, or were there other factors at play?
It was likely a combination of things. The volatility of the yen made long-term strategies like the carry trade less appealing. Additionally, the rise of online trading platforms gave individual investors more access to real-time market data and tools for executing trades quickly.
It sounds like technology played a crucial role in empowering these investors to become more active participants in the market.
Precisely. And it wasn't just about the technology itself. It was about the accessibility of information and the ability to react quickly to changing market conditions.
So did this foray into day trading prove successful for those who embraced it?
It was a mixed bag, as with any high-risk, high-reward strategy. Some thrived developing a keen sense of market timing and racking up impressive profits. Others, unfortunately, made costly mistakes, highlighting the importance of experience and a deep understanding of market dynamics.
I imagine the learning curve for day trading is pretty steep.
It definitely is. It requires not only knowledge of financial instruments, but also discipline, emotional control, and the ability to manage risk effectively.
It sounds like Mrs. Watanabe was becoming more sophisticated in her approach to the markets.
Absolutely. And this evolution caught the attention of the global financial press. The term Mrs. Watanabe began appearing in headlines worldwide, often portraying these Japanese housewives as a formidable force, sometimes even outmaneuvering seasoned professionals.
I can see how that image captured the imagination. It challenges the stereotype of the passive risk-averse individual investor.
Exactly. It highlighted the increasing influence of individual investors armed with technology and information on global currency markets.
But was Mrs. Watanabe truly an accurate representation of who was participating in these trades?
It's important to remember that Mrs. Watanabe is more of a symbol than a demographic reality. While many women were actively involved in these trading activities, men also comprised a significant portion of those participating in the yen carry trade and day trading.
So it was more of a catchy term to represent a broader trend in individual investing rather than a literal description.
Precisely. However, the term's popularity speaks volumes about how these individual investors, regardless of gender, were changing the dynamics of the financial world.
So what happened next in this financial saga?
Right.
Did the yen carry trade continue to be a dominant strategy?
Interestingly, in the early 2000s, the Japanese government began shifting away from its zero interest rate policy. This was an attempt to normalize its monetary policy and encourage more domestic investment. As a result, the interest rate differential that made the yen carry trade so lucrative began to shrink.
That must have been a significant blow to the strategy's appeal.
It was, and then in 2008 came another major shock to the global financial system, the global financial crisis. This event triggered a renewed flight to safety, and once again the Japanese yen became a sought-after haven.
So just like in 1998, the yen strengthened, putting pressure on anyone who had borrowed in yen for carry trades.
You got it. It was a repeat performance, but on a much grander scale. The 2008 crisis underscored the inherent risks of the carry trade and led to significant losses for many investors, including those who've been riding the wave of Mrs. Watanabe's success.
It sounds like these global events really exposed the vulnerability of the carry trade to sudden shifts in currency values.
Absolutely. It highlighted the importance of not only understanding the potential rewards of a strategy, but also carefully assessing and managing the associated risks.
So after these two major crises, did the yen carry trade disappear entirely?
Not completely. While its popularity diminished, some investors continued to engage in the practice, adapting to the changing market conditions and seeking opportunities, even with narrower interest rate differentials. Remember, we're talking about millions of individual investors, each with their own risk tolerance and investment approach.
So even after those financial storms, some investors held on to the carry trade, hoping for calmer seas.
Yes, and interestingly, around 2013, we actually saw a resurgence of interest in the yen carry trade. This was partly driven by Abenomics, a new economic policy in Japan that included a massive monetary easing program.
And monetary easing means?
Essentially, it involves injecting more money into the economy and lowering interest rates to stimulate growth. In Japan's case, this led to even lower interest rates, pushing the yen's value down further.
So the lower yen made the carry trade attractive again.
Exactly. It widened those interest rate differentials that the carry trade thrives on. And it wasn't just individual investors like those dubbed Mrs. Watanabe who took notice. Hedge funds and institutional investors also saw an opportunity to capitalize on the low yen rates and invest in higher yielding assets elsewhere.
It sounds like the Mrs. Watanabe phenomenon became a symbol of a much broader trend in global finance.
That's a great point. The term came to represent the growing impact of individual investors on currency markets and the interconnectedness of the global financial system. It demonstrated how individual actions, when amplified by the scale of online trading, could influence currency valuations and even contribute to market volatility.
So looking back at the whole journey of Mrs. Watanabe and the yen carry trade, what are the key takeaways for our listeners?
I think there are several important lessons to be learned. First, it highlights the rise of retail investors as a force in the global financial system. They're no longer just passive bystanders, but active participants who can influence market dynamics.
It's a reminder that financial literacy is more crucial than ever.
Absolutely. Understanding the intricacies of financial markets, the potential risks and rewards of different strategies, and the impact of global events is essential for anyone engaging in these activities.
It seems like Mrs. Watanabe's story also underscores the need for adaptability in navigating the ever-changing financial landscape.
That's a key insight. The strategies that work in one market environment might not be successful in another. The ability to adjust to new information, assess risks, and learn new approaches is crucial for long-term success.
And perhaps there's a lesson here about challenging traditional notions of who can participate in financial markets.
Indeed. Mrs. Watanabe's story challenges stereotypes and shows that with access to information and technology, anyone can engage in the global marketplace.
So for those listening who are intrigued by the world of finance but maybe a bit intimidated, what would you say?
I'd encourage them to embrace that curiosity and remember that learning is a continuous process. Start by exploring resources, seeking out reliable information, and gradually building your understanding. The world of finance can be complex, but it's also full of opportunities for those willing to learn and adapt.
Well said. On that note, we've reached the end of our deep dive into the fascinating world of Mrs. Watanabe and the yen carry trade.
It's been a pleasure exploring this unique corner of the financial world with you.
And for our listeners, thank you for joining us on this journey. Remember, this is just one of many captivating stories we've uncovered here on the All Sorts podcast.
We have a whole library of deep dives waiting for you, covering everything from the history of the stock market to the future of cryptocurrency.
To make sure you don't miss out on future explorations, be sure to like and subscribe to the All Sorts podcast on YouTube and tap that notification bell.
And if you want to connect with us beyond the podcast, find us on X, Instagram, and Threads for more insights, behind-the-scenes glimpses, and opportunities to share your thoughts.
We love hearing from you. Until next time, keep exploring, keep learning, and remember,
The world of finance is full of fascinating stories waiting to be discovered.